So basically what we have right now is, with the election coming up, there's a tremendous amount of politicizing, therefore confusion, and the market, which was very heavily focused on the conversation about more stimulus, even with the negotiations stalled between the Democrats and the Republicans, you had Trump coming out and saying that he supported more stimulus. Then all of a sudden, when Justice Ginsburg died, the whole conversation switched to who's going to be the next Supreme Court justice, and can we get one in there who's conservative before the election? And I think what happened in that case is that Trump, trying to appeal to all of his bases, his conservative base, his corporate money base, his party line, no matter what, Republican base, is now all over the place, and the market senses that. And one of the key factors that happened yesterday, actually, which would be Monday, is that BlackRock, which has really been what the Federal Reserve has used to buy ETFs and to invest for them, had a major pullout of junk bonds. In fact, one of the largest in history. They pulled $1 billion out of junk bonds. And that's a significant turn of events for the market and should be considered seriously. Well, the high yield is different. The high grade bonds, LQD, are doing a little bit better, but they also got money pulled out yesterday, about $744 million. The junk bonds are significant because they really gauge risk. And if you're going to be buying junk, essentially, companies that have junk rating, and putting your money into those bonds thinking that the economy will improve and these companies will improve, that's very bullish. But when that starts to reverse, it's exactly what happened right before the big swoon in February. Junk bonds started to fall apart. So if we're going to see junk bonds continue to fall, that is not going to be a healthy situation for the market, unless the focus gets back to government stimulus, which still could, because what's going to get you elected at this point? Money for people, a healthy stock market, projections for a better economy, or a conservative Supreme Court that you can deal with after you win the election? Really, it's going to be, I think, down to that. To me, Powell really showed his hand last week after the FOMC meeting when he said that there's really not much more the Fed could do. It's up to the government now to supply more money. That kind of laid out there, and by the way, was the reason why we started to see the market really tank. And so today he's saying just the opposite. He's saying now, oh yeah, we have more tools, and we can use those tools if we have to support the economy. And then on one hand, he's saying that we are still really poor in terms of the economy, and there's not much hope unless we really can get through with more stimulus money. And then on the other hand, he's saying, well, I think we're going to have a robust economy by 2021. So it's been very hard to navigate what he really means. A lot of the conversation today has been about these 1 million and under loans and whether they need a new facility and whether small loans will be forgiven. I think that's important, but not necessarily the crux of what's going to move the market. First of all, we were heavily in metals, and even though we still have some of our positions from much lower levels, some of the ads that we did we're out of now, and we've taken profits on that, so we're lighter in terms of gold and silver. I still believe with sugar futures going up, soybean futures going up, even though the dollar is getting stronger, we're still looking at that stagflationary environment I've been talking about for months and months. I haven't changed my mind. So I would continue to watch what happens with the dollar. If the junk bonds continue to fall, and we start to see the falter now in the small caps, the transportations, the biotech, the retail sector, then I think we're going to see another correction, but I wouldn't get too heavily short because, as I said, at some point we'll see that flip where the conversation will go back to, can't we make a deal, guys, before the election to help the American people with stimulus? So right now, I have to say, sort of sitting tight makes the most sense to me. Manage what you have. Don't get crazy long. If you want to day trade, obviously the tech stocks have had some interest back in them, but particularly AI computing stocks. But in terms of everything else, the real breadth of the market, I would be relatively cautious, but kind of patience here to see which way the political conversation turns.